What's going on, guys? Today we're going to review the Robinhood Portfolio, and I can't even remember the last time I actually did a video. It's probably been about 3 to 4 months, but we're going to go ahead and talk about my strategies and what I have been up to. Right now, portfolio is at $81,000, so we are almost there, guys. We are almost there to $100,000. That is to go. I've talked about this before in the previous videos, how I'm really excited that I grew this portfolio. I think I started off with about $7,000 and I grew it all the way to 100K. So I appreciate all the people who stuck by me and supported me throughout this journey. But we're almost there, guys. We're going to take a look at some week stats. So for the week, 5%, guys. We're up 5%, $4,000. Let's take a look at the month stats. In the month stats, I'm up 7%. The portfolio has pretty much reached blue skies. It's pretty much taken off because of some of the changes I made, and we're going to quickly talk about what those changes are. But let's take a look at the 3-month chart. 3-month chart shows that I am up 13%, $9,000. Let's take a look for a year chart. The year chart shows that I'm up 29%. And that's really not bad. I don't think I'm beating the Dow Jones or NASDAQ or anything, but I really am happy that the markets are sort of recovering, especially through the COVID news. I know a lot of people are concerned about the Delta variant, and just try to have a strategy, guys. Try to protect yourselves. There's a lot of talk: should I get vaccinated? Should I not get vaccinated? I'm not going to go all into that, but I definitely want to wish that everybody remains safe out there if the Delta variant gets out of control. Let's take a look at the all-time chart. The all-time chart shows that I'm up 39%, so $23,148. Like I said, I'm really excited about how the portfolio has grown. I'm almost there. I just need to keep doing what I'm doing. I need to just keep focusing on me. But we're going to take a look at the strategies and the stocks that I have built for the portfolio. I really don't have a lot of positions, guys. I did some massive changes with the portfolio, but this is the companies that I currently own at the moment. I know it's been a while since I made a video. I can't even remember what was some of the companies I owned in the previous video. I think I took a gamble on Skills, the stock SKILZ. Let's take a look at where Skills is at right now. I just want to quickly look at where it's at. Just try to pull it up. Okay, so there it is, and right now it's sitting at $15.25, and I think I bought it for at least $17.81. I think I may have sold it for a loss. However, I wanted to just move that money into Microsoft. So I think you guys saw that I have 100 shares of Microsoft, and yes, I did sell it, 290 shares for $16.59. So I did take a loss, but it wasn't really all that bad. It was bad that I took a loss, but I did make up that money by buying Microsoft, putting this money into Microsoft, because I felt that the esports strategy, as far as like Microsoft's diversity being with the Xbox One and just being in video games in general, I would rather be there than this upcoming company of Skills, which has a lot to prove. They have a lot to prove just with their earnings. They have a lot to prove how they are going to market their mobile gaming platforms. The mobile gaming platforms, they need to know how they're going to work around that. So I did some changes, and I did some strategic moves, and we're just going to take a look at Facebook. That was part of the process. $369. About 40 shares, average cost $342. I'm up $1,000. I love Facebook. I always wanted to buy the company. I was a little bit late buying the company, but not too late, because I think of Twitter and Snapchat. They reported earnings not that long ago, and they pretty much blew away expectations. And when people saw that, okay, Twitter and Snapchat have blown away expectations, it's only a matter of time before Facebook does the same thing. So they're all in like the social media space, and it's just a matter of time before Facebook really just rockets to the moon. So I think that a lot of investors just piled into Facebook while it was still cheap. To me, I thought it was still cheap. Morningstar says that Facebook has intrinsic value of $390. I definitely agree with that. I actually think that's actually more than Facebook's probably worth around $500 at this point to me. But for the past 3 months, it's been on an absolute run, a tear. It's been on just plowing through all-time highs. It's all-time highs, 21%. And I wanted to buy this company. I definitely think that social media is not going anywhere. It's a 2 trillion market cap. I love these big market cap companies that you can just pretty much put some money in, and it's not gonna they're not gonna go anywhere. Apple, Facebook, Amazon. There's some of the companies that I prefer more than others. But Facebook is a really, really good company, and I'm up $1,000 on them. So I bought it just in time, and I think they do have an earnings report next week. Take a look. So yes, on 7/28, they do have an earnings report. I do expect them to beat it because Twitter and Snapchat beat theirs pretty handily. So not saying that Facebook will beat theirs, but it's a pretty good news that it's a pretty good guess that they will. So let's go ahead and take a look at Apple. I have a full position in Apple, 100 shares, and I have an average cost of 111. So I think in the previous video I had an average cost of 102, and the reason why my average cost went up is because I did buy more Apple. Now I just want to see where I bought more Apple at, because I don't even remember some of this stuff. 123. So I bought 5 shares at 123, and then I bought another 70 shares at 123 as well. So in total, that's about 75 shares more of the 100 shares I already owned in Apple, and that increase my average cost in Apple, which I'm perfectly fine with because Apple is a wonderful company. And I ended up selling those 75 shares at 142. So I made some good money on that trade. I made about $2,000 on that trade, and I kept the full position of 100 shares, but I definitely thought that I needed to move that money elsewhere, and I think that $2,000 pretty much went to Facebook, along with the $8,000 that I already had just sitting in there. So altogether, those were pretty good moves within the market. I bought Apple right at the dip here at the 123, so I bought it at 123 and it just rocketed it up. So that was a pretty good move. But I don't have much news about the company. They do have an earnings report next week. I do expect them to beat it, but if they don't, I will be buying more shares of Apple. I will continue to buy the dips in Apple just like I did last time, and I will continue to sell at the peak. However, I will not sell my full position. I always consider a full position with the company 100 shares of the stock. So I'm not going to sell this position. I'm just going to sell the shares that I just bought. Like, for instance, I bought 75 shares. It went up to 142, and then I sell those 75 shares, and then I keep the 100 shares so I can use some money elsewhere. But I don't have much news about the company. Great company, and I'm never going to sell these. I'm never going to sell below 100 shares. So I'm up $3,000 on the company. Let's take a look at Nvidia. Nvidia at 194. I believe the company did a stock split not too long ago. I think it was around July 20th. I have 100 shares for an average cost of 177. So in accordance to the stock split, since I had 25 shares for every 4-to-1 stock splits that occurred, I got 100. So 25 times 4 equals 100. So that's the reason why I have 100 shares. The whole thought process behind buying Nvidia is, even though the PE ratio is just so high, this is the growth stock that I need to push this portfolio to $100,000. And I noticed that that the company was doing a stock split, and since I sold skills, I wanted some more exposure to esports. So I know I have Microsoft, I know I have like Xbox and all that, but Nvidia is also in the video game space as far as like the as a chip maker, semiconductor stock. And this is sort of like my AI play, like for the future companies who's going to be leading that that market, that sector. I do believe Nvidia is going to be one of the top 3 companies in artificial intelligence. So that's the reason why I bought this. That's the reason why I bought the stock. And the stock has just been on, again, these tech companies are just flying on the moon right now. They have some very good earnings reports. I do expect at some point there will be a correction. I know Monday there was quite the scare for the Delta variant and the market sold off, but it just went right back up. And I think this trend will continue because some of these companies, they just continue to rake in the cash. They continue to have good earnings, and investors, as long as the company is making money and they're making good moves, people are going to invest in it. So A little late to the party as far as Nvidia, but I still got in before the split, and now I own 100 shares, so I'm up $1,000 on them. So a lot of these companies, I'm up big time on them, and that's the reason why the portfolio has been doing so well as of late. But Nvidia, Microsoft are my esports plays, my like slash video games, artificial intelligence, and cloud space. And other than that, I don't have much to say about them. I don't think they have an earnings report next week. And intrinsic value, as for Morningstar reports, Morningstar says that it's at 138. So that's not too far from my average cost, but I'm still a little bit over. I think Nvidia is going to go to 1,000. Before the stock split happened, it was already at $700. So that's 300 more bucks, guys. It's 300 more bucks before if it were ever to get to $1,000. And yeah, I still think that Nvidia is going to grow massively. Bearing that without a correction or a crash, I think Nvidia is going to get there. So I'll take a look at Google. So I did buy Google. So my whole strategy is that I wanted to own some FANG stocks, and I was just going to focus on FANG because FANG has some pretty good returns. I need the returns to push this portfolio to $100,000. But I didn't buy Amazon because obviously Amazon's very expensive, and I'm just waiting for them to announce a stock split. I do love the company, but I just cannot build on any position in Amazon at the moment because it just costs so much. For one share, it costs like $3,000. I could buy fractional shares, but at this point, I would rather just focus my money elsewhere, which is the reason why I bought Facebook. So that's the reason why I did not buy Amazon, even though my portfolio would love an e-commerce company. I think the other flame stock is Netflix. They had an earnings report, which was not very good. They did not meet expectations. I think they made subscriber growth, but they didn't meet their EPS or something like that, and the stock pretty much fell. So I think Netflix, out of all the FANG stocks, I think Netflix is the one I do not like the most because their business model is really hard to get around. They're trying to diversify into the gaming space, according from what I heard, but they're too reliant on the subscription growth as far as subscribers for their for streaming. And I think that there's so many competitors in the market now where you can just simply buy Google and stream off YouTube. So since Google owns YouTube, you get streaming from that way. You can buy Amazon, which owns Twitch, and also Amazon Prime services and cloud. You just get the streaming from there. Or you can just buy something like Disney, which you won't have to pay like $515. Instead, you can buy Disney. I know Disney's overvalued, but Disney Plus is still raking in the cash, and I have Disney Plus. I still use it. And there's a lot more competitors now, so definitely I think that's really taken away from Netflix profiting potential. And if you look at Netflix, they have not done well at all for the year. Let me take a look at the year chart. And Amazon, they're only up 9% for the past year. So there's a lot of volatility with the stock. The bears are pretty much in control in the stock. There's been just mountains of trying to break out, but it just can't seem to break out because it just peaks at that peak point and then it just falls. So yeah, I didn't invest in the Netflix. I just chose Nvidia as a replacement, and we're seeing some phenomenal returns from that replacement. I definitely think that was a good choice. But anyway, Google, I have one share. I'm only buying one share of this stock. I just wanted to own the company because I like the company. The balance sheet is pretty much a fortress. Total return, I'm up 7%. Not huge in portfolio diversity, but Morningstar says intrinsic value is around $3,000, which is still pretty good. But Google is not going anywhere. Again, cloud space, Google Cloud, which is probably one of the best in the business. They own YouTube. They do so many things. A good balance sheet, cash cow. This thing is pretty much going to be, I think Google is going to catch Amazon soon because it has outperformed Amazon by a large margin this year, 83%. And I just expect that to continue at this rate. So Google is a pretty good company. And again, Morningstar says that it is still below its intrinsic value. So these Morningstar reports, I don't take them into consideration as far as buying the stock, but it does give you a second opinion on whether or not you can have to buy it, whether or not you want to buy the company or not. It just gives you something to look at, and that's the reason why I like this Robinhood Gold. Again, you can get this just by going to the Morningstar website, but I like to have everything in one place, and plus I want a bigger deposit, so that's the reason why I got Robinhood Gold. And I think the final stock is Microsoft, and which is by far my largest position. I have almost $30,000 in the Microsoft for 100 shares. I bought it a little bit late at an average cost of $258, and the total return, I am up $3,000 on the company. So let's take a look at what Morningstar says its intrinsic value is at $278. So that's above. The price is above its intrinsic value, and I definitely think Microsoft is starting to get a little bit pricey here, guys. But again, phenomenal companies. Sometimes in order to get the best companies, you have to overpay for them. So I mean, look at Costco, look at Amazon, look at Microsoft. But Microsoft has probably the best chart the best 5-year chart I've seen in the markets right now. This is definitely a top 3 chart as far as trends of it just trending up. Microsoft is not a company that's not going to go anywhere. Just like Apple, $1 trillion market cap, big company. They do so many things, and this is a significant reason, big reason why my portfolio has been doing so well as of late. I think I may have had Berkshire Hathaway and Disney. Those stocks were removed for a little bit more growth opportunities because I felt that those stocks have peaked a little bit, especially Berkshire Hathaway. I know it has intrinsic value of like $300. It's at they Morningstar says $293. I'm definitely seeing a sort of like pattern here as far as like the company sort of peaking out a little bit, but I definitely think that they have the potential to go higher. And then Disney, obviously, I don't think Robinhood shows what their PE ratio is, but I definitely believe that it's quite high, and it has been hovering around this sort of 200 to 165 mark. So, and it's been like that for a while now. So I definitely think there's some. You have to look at that. That's something that you should look at and say, okay, maybe I can move this money elsewhere. And that's what I did. I had some money in Disney. I moved this money out of Disney into something like, Google and Facebook, companies that still have a lot to grow and still have a lot to prove. But other than that, I don't have any of the companies, guys. We're almost there. I know I want to just thank everyone again, everyone who stuck by me and, watch me grow this portfolio. It's been a wild ride. I've seen corrections, I've seen crashes, and I had to sacrifice a lot to get here. That's definitely true. I'm thinking about making a video as far as like when I get to $100,000 about like the fastest. I wouldn't say the fastest way to get to $100, but things that that will help you get there. There's a lot of things that I consider that will help you get to $100,000, and I don't know what I'm gonna do after that. I think that once I reach $100,000, that I might turn on the margin. Right now, I have the margin turned off because, again, I've always said this in previous videos. I don't believe in spending money that I don't have, that I don't own. But at this point, I do believe that I might turn on the margin and then just put some of that money into probably Amazon, because Amazon is a company that I'm really looking at. It's either going to be Amazon or Alibaba, but I'm really cautious on Alibaba as far as like right now, because I feel like the CCP is definitely weighing down on it, and this is Alibaba's going through some tough times right now, but I definitely think there's a significant value play here. I definitely think that Alibaba, as far as when the whole China thing and the whole CCP gets downplayed and everybody just ignores the news, which I don't think they are. Alibaba's been getting punched in the face for a good while now. The past 3 months down 11%, but. If not Alibaba, then I'm gonna probably put this money, the margin, into Amazon. I'm gonna put the margin, a good chunk of the margin, into Amazon, and then after that, I'm probably gonna I want to buy at least 10 more Facebook shares. So that's pretty much the plan for my portfolio. I'm gonna buy at least 10 more Facebook shares, and what I'm gonna do is I'm gonna put Amazon into my watch list. I already have a separate watch list, but I do want to buy the company because I feel like the company needs a retailer. They need a e-commerce, a retailer stock, and I think that Amazon can fulfill that need. So I'm gonna add Amazon. I'm gonna turn on the margin once I get to 100K. I'm going to buy 10 more Facebook shares, and the rest of that margin is going to go into Amazon. So that's my strategy. That's how I'm going to do it. And let me guys know what, how you guys feel, if that strategy is it good enough. Is there something else I can do here? But let me know. I hope everyone has a great Sunday, and I'll talk to you guys next time.